What's happening? So just a quick video just to show you how to measure pips using Tradingview. It'll help you with getting better entries, better exits, and also better risk reward ratio. Now I do all my analysis on Tradingview. Now I place all my trades on MetaTrader on my mobile. Sometimes I'll do it through the web trader, but mainly I'll do all my analysis on Tradingview on a laptop or tablet just to get a better look at the markets. I feel like on a mobile things can be a bit compact, especially if you're swing trading. So I always think it's better to do your analysis on a bigger screen, and especially learning how to measure pip values just so that you know that what you're risking and what your take profit points are is very important. This is one of those fundamental things people often overlook. So we're on pound to the dollar at the moment. We're going to start by identifying our entries and exits. So let's say, for example, we'd enter a long position, and let's say we're going to enter around here, and we're going to look to take our take profit, say, up here. And we don't know where we're going to put our stop loss yet because we haven't figured out the pips. So then we'd go on to the ruler down here, and now the ruler is what you use to measure it, and it will also show you the pip value. So I'm going to go from entry point up to my possible take profit up here, and now you can see, oh, I've double clicked, should have single clicked, bear with me. So we'll go from the entry up to the take profit. Gosh, now you can see up here, top right hand corner, 51.6. That means 51.6 pips. So you can see there from your entry to your take profit, there's 51 pips. Okay, and then exact same for the stop loss. You would just go from your entry, and then let's say, for example, you only wanted to risk 20 pips on this trade. So you'd bring it down, you say, right, there's 20 pips, give or take. So then you know where you can put your stop loss, and then I'd just come over here, the mouse is playing up, click on the little arrow across, draw a horizontal line, and then we know stop loss is going to go at 1.23395, and the take profit was up here. Okay, so again, I'm going to show you again. Let's say we're entering a short position. So again, let's say our entry is here. We're going to enter a short position here, and now this time we're going to focus on risk management, because like I said, working out the pip values and how many pips you're risking and aim to be winning, let's say, it plays a big part with your risk reward ratio, and especially for people with small accounts, I mean, you should always be focusing on risk management. But I like to say, you want to sort of go around a 3-to-1 risk reward ratio, and what I mean by that is, for example, you would only be risking 20 pips to gain 60 pips. So you could have 2 losses out of every 3 trades, but that third trade could still make you profitable. Okay, so we're going to go off a 3-to-1 risk reward ratio, and I'm aiming to make 60 pips and risk 20 pips. So that's my entry. So I know I'm going to enter around 1.23520, let's say. I want to do my stop loss first. So my stop loss, I only want to risk 20 pips. So my stop loss is going to be here. So I'm going to bring up the measuring tool. Stop there, that's roughly 20 pips, 1.23718. So I know there, put another horizontal line. Mouse has got a mind of its own today. So there we go. Stop loss goes there, 1.23707. And then again, click on the measure, the ruler. And I'm going to go from my entry, what do we say? It's from there. And then come down, and we say we wanted to make 60 pips. So wait until that is on 60 in the top right hand corner. There we go, 60. and that's at 1.22974. Again, I'll put a horizontal line just for when it disappears. So straight away we know that this was our entry point. Put a horizontal line. This is our stop loss, and this is our take profit, and we've already got a nice little risk reward ratio there. And literally, just that little change, just being able to work out how many pips I'm going to risk, what I'm going to set my take profit point on, and just sort of whereabouts it's going to go, is already making such a big difference with my trade. It's already ticking that next thing off the list just to add on to the confluence. Now there is another method you can actually do, which is probably a bit quicker, and that's just by doing it through your positions. So if, for example, you were going on a long position, and I'm going to enter here, leave the take profit, stop loss, but then if you see here, after the percentage, this number here, 37, that just gives you the pips straight away. So that's say my take profit is on 37 pips, but my stop loss is also on 37 pips. So let's say, for example, I wanted to risk less than that, and I brought my stop loss down. You can see also it shows where the stop loss pip value would be. So let's say I'll leave that on 50 and I'm risking 15, looking to gain 55, 60. Okay, very quick way to work out your pips. Just saves you using all these third-party websites and calculators and putting in the entry price, the exit price, and all this nodding or literally just gets it done within a couple of moments. Okay, hope you enjoyed the video. Like I said, it's just a quick one. I'm breaking down all these videos across multiple different videos, breaking down the approach. The next one's going to be focusing on identifying consolidation zones and what differentiates them from trend zones. And then we're going on to trend reversal candlesticks, patterns, indicators, quarters theory, news releases, and then finally just wrapping it all up into using it as like one approach. So I'll leave it there, guys. I highly recommend jumping on Tradingview, creating yourselves an account, having a look through other people's ideas and analyses, and mainly just putting into practice what I'm showing you. Because obviously the main reason I'm making these videos is just so you can take it with a pinch of salt, go off by yourselves, and just practice drawing your own trend lines, getting used to calculating the pips, and just do your own due diligence. Okay, big fudge out.